Hello, welcome. How are you? Today I'm going to do the O shares ETF investments, and these ETFs is none other than but from Kevin O'Leary. And if you must have heard of this person, is the one of the Shark Tank sharks, and the businessman born in Canada, age 66 years in Montreal. And I respect this guy, and I thought, why not I just cover the ETF from his company. So because he's a great, if you just search for him, I think he's a great believer of the dividends and dividends coming back. He has his mother philosophies which he shared, and I heard his interviews in the past. And when I see and come to his website, it's no surprise that he has all the ETFs pretty much giving almost all, because the internet giant is a dividend ETF, but US quality small cap, this is a large cap dividend and all, and this is a Europe based dividend, right? ETFs. So let's look into it. I'll open it one by one and see how much what's and read the facts, and then have some my view on that. Okay, so let's get started. So US quality dividend ETF, if I just open, which I have already opened here, right? If I can go from the start. So this is O shares US small. Okay, not this one. Maybe I'll just open again. That one was another one. Okay, so this one. So this is the large cap. Basically, the market cap is large, and the quality dividend. So basically, these are the dividend-paying ETFs, right? And it's reflect only the stocks which are on the large caps. So that's in short it is. If I quickly go and see the expense ratio, it's 48 basis points, which is quite a little bit high as compared when other ETFs are lowering their fees, right? And you are just tracking the, seems like a large cap index, if I'm not mistaken. Yeah, is a large tracked index, right? Okay, the target index is designed to measure the performance of public large cap and mid cap. Okay, so they basically what they do in this ETF, they try to track the large and some mid cap uh, dividend paying companies, and it's only in the US based, which has a high quality, of course, low volatility and all, right? So that's what they are doing. Okay, let's see the performance. So from the performance perspective, if I see from the 3 years is 7% return. Of course, the quarterly return is 15%, and this year return is negative 8.27%, which is quite normal when all the others, when the market is meltdown, these are meltdown. If I go underneath, what are the top 10 holdings? So it's pretty much, it has 101 stocks underneath, but the top major one is Apple. Okay, Microsoft is another tech. Home Depot, Home Depot is paying dividend. Okay, so Apple, I think, is a good company, no doubt, but the share is overvalued based on my intrinsic stock valuation. You can check that on my website, on my YouTube channel. And Microsoft, I have also covered, is one of the great, I think this is a company, and I have also reviewed this. Home Depot, I'm not sure how it's a dividend paying, but it's not that, based on the current situation, how many people will go and use this. Is a heavy brick and mortar stores. So, but from the ETF perspective, that's okay. Johnson and Johnson, PepsiCo is fine. Walt Disney, okay, so Disney, okay, so these are the large cap. Visa is a good company. Disney maybe is because of no park close and all, coronavirus is get impacted, beaten up stocks. But anyway, they bring these companies together, at least top 10, and I see the 10th one is 2.5%, right? So that's not much. So if I go next, what are the other ones? MasterCard, okay, United Health, okay, okay. So Lockheed Martin, Merck. Okay, so these are then one, and so basically these are 101 companies which make these this ETF. Nike is a good one. I covered Nike. Cisco is, I think, is a very good stock too. Okay, and Moody is another one, good one. So overall, I think the composition is okay, but and if you see the 25% almost of these stocks coming from IT, and rest almost 18% is coming from healthcare. So if I combine these, so this seems like a little bit risky in terms of the compositions, because major is coming from IT and health, right? Other than that, I think, and one more thing to point out here is the ETF has a little bit higher in terms of the expense ratio, because it's just track the dividend paying large cap stocks. That's just my view, because when other companies, we comparison has a lower ETFs cost available, right? Cost wise available, but maybe because of Mr. Wonderful brand. Uh, so let's go next, right? Then another one is a small cap quality. Okay, again, oh wow, small cap is also 48 basis points. So seems like there is no distinguish between large and small. The same. Uh, if I see from the what is here, this target, what is the target index? Small cap dividend paying issuers. So they track the small cap only here. So the first one they cover the large and mid, and here they cover the small cap. The performance on the small cap, wow, is even worst. Only 1.85%. Strange. So it seems like if they're high quality, they should be giving dividends, right? So it seems like these companies are, maybe on the price wise, they are suffering. I'm not sure. I don't follow most. Okay, Morningstar is a good, but that impact by the coronavirus and all. So again, this is 25. Okay, this is more like on the industrial side, and the financial side 20%, and IT is 15%, which is a little bit better. But if I see the fund performance, the fund performance is not good. Okay, so similarly they have an internet giant. Okay, let's say what it meant by the internet giant. In the internet giant, okay, so seems like they have a standard fees of 48 basis point regardless of what is this. Maybe it's easy, or they are asking, he's asking somebody to just create these ETFs, and maybe these are more passive ETFs, right? Because if it tracks index. Okay, so okay, this is very good. So wow, it's a huge 1 year return is 51%, and that's great. And quarterly return is 53%. Okay, but if I see here, right, these are more like, yeah, internet based companies. Okay, Amazon, Alibaba, Tencent, Microsoft again is a tech based. It's more like a high risk tech based internet companies, right? Okay, Facebook is okay, Alphabet is okay. These are more stables. Okay, this is if Chinese stocks are there too. Canadian stocks, Shopify. I think this is also overvalued stocks. Yeah, if they have, yeah, so if these tech industry goes down, I'm only concerned is like 43% is tech. So, but maybe this is the information technology, right? Internet, but this doesn't mean, yeah. So, yeah, so it's also these get exposure to this big names, and in the name of the internet and e-commerce, right? E-commerce ETFs, if somebody wants exposure on it, so it's pretty good quality names are there as well. Okay, so and the cost. Okay, and if you see from the weights coming as a country of allocation, right? 62 China, Canada, and German. Okay, so Canada is only 2.5, or major is, you see, China and US in terms of the tickers inside the ETFs. Okay, let's take the last one. Maybe I'll close shares OSM. Okay, this is a Europe one. So similarly, okay, this is a Europe large and mid cap. Similarly, I think what they have on US. And again, no surprise, the expense ratio is 0.48 percentage. Europe, they are not doing pretty good. It's sure it clearly reflects the number. And then these are some of the companies, GlaxoSmithKline, SAP, and all. It's quite good companies, right? So it's well names there. Okay, so when I looked into his prospectus, I also see in future it's his company coming up with robotics, AI, these as well. So I haven't seen on his website yet. So let me, yeah, you see this is in the prospectus is star, maybe it's coming in the funds above it actually had not yet commenced for operation, right? So it might be coming in future, but I do hopefully we'll see some good names there, good quality names, right? So yeah, so that's it from this Kevin, Mr. Kevin O'Leary, uh, companies, ETFs, and maybe he can have more for, because from Canada, I'm surprised he didn't put any ETFs in for Canadians, right? So why not you create one ETF for Canadian, right? So as for Canadian investors, if he wants to exposure in Canada, not just in US based. Okay, but maybe he can say, okay, because we have a bigger market there and all, but just a question is a question. So let's see. Okay, so that's my view on his ETFs. If you want me to cover any other company ETFs, put in the comments. And if you want me to uh, review any of your stocks of your choice, please put in the comment as well. And please smash that like button and subscribe, so more and more people can get the benefit of getting this opportunity to view these videos as well. Thanks and bye.